Hello there, my friends. Chris Marcus here with you for this week's weekly market wrap-up on Friday, September 14th. As always, an interesting week in the markets. Not too much price action per se, but certainly some interesting stories which we will dig into after a quick look through the levels. You can see, again, the stock indices in the U.S. rather flat, S&P at 2906. NASDAQ futures 75.45, and the Dow Jones above 26,000 now at 26,154. In terms of commodities, gold slightly below 1,200 at 11.98. Silver got beaten down a little bit again today, down to $14.08. It'll be interesting to see how low it goes. Certainly seems like a good level to buy to me. And then we have the crude oil contract at 69 bucks. So if we take a look over here to the crypto market, again, crypto's sitting in that range where they've been past month or two almost, feels like now, floating up Bitcoin, floating around 6,500, 6,200. But today's sitting right at 64.92. Litecoin trading 54.27 on today's pricing. Now, in terms of news, of course, there were a couple interesting stories. One here on CNBC, which I think captures what I believe happens. In fact, why I left, a large part of why I left Wall Street, because what I saw happening once I really started to understand what was going on, and seeing how there's a difference between what's going on and the picture presented in some of these stories. So case in point, decade after housing crash, Fannie Mae and Freddie Mac are Uncle Sam's cash cows. I'd be happy to bet someone that a little bit longer on the historical time frame, that opinion will change. Yet, 2008, mortgage giants Fannie and Freddie faced imminent collapse, which was true. The Treasury Department stepped in with a bailout, and it turned out to be a vastly profitable move for Uncle Sam. The move has been paying off ever since. That's the part that I would dispute, and you can Google this one if you want to see more about that. Yet, yeah, when you printed a couple $1 trillion and inflated another real estate bubble, sure, your books are going to look good. But remember that when the bubbles collapsed, a lot of these markets were no bid, which means they couldn't find a buyer for these bonds until the Fed came, printed the money to buy the bonds at, and I guess this is a bit of a jumbled mess, but I heard and would speculate and highly be likely to believe that the levels that the Fed actually paid were probably very generous marks to keep the banks afloat. So yeah, and then after they collapsed, a lot of money was printed, the bubble was boosted back up. So sure, it's like on paper, Bernie Madoff looked great as investors were pouring more money in. That didn't make it a good deal, though. Just like this is going to be a big problem. I've talked a lot about the signs of the real estate market collapsing already. Certainly, if we continue to get rate increases, then I'll say it again, the more the rates go up, the sooner the bubbles pop and the more likely it is to happen. And when that happens, I mean, again, I don't know, maybe we'll just print a straight in hyperinflation, but if you keep raising interest rates, and we can check back with, I'm not too familiar with Diana Olick. I'm sure she's a wonderful person, although I will respectfully disagree that this was a saving grace. Although she does mention, in all fairness here, indeed, the bailout saved the housing market. I don't know about that. But now the question is how to get them out. Similar, and that's... a couple words at the end there, yet a darn expensive question that I don't believe Fannie, Freddie, the Federal Reserve, or Washington has the answer to. Similar to, I know people get tired of hearing, well, the metals are manipulated. At some point, they're going to go up. Although, I can't, unfortunately, I've given up trying to convince anybody of anything. Yet I'll just say that part of what's allowed me to feel so comfortable, even holding silver, having most of my life savings in silver at times when it's gotten pummeled, is that the reason I felt the risk is worth it is that similarly, the Federal Reserve is backed into a corner where either they continue to print, eventually to hyperinflation, or if they actually retracted the printed money, since it has passed the point of no return, the debt loads, the printed money bags, they're just so big now that undoing all of that would collapse the system, which is in the process of happening. Again, this is not fact, but my personal belief is that, geez, you have to think some sort of reset is on the way of some form, whether that's an overt, we wake up and they say price of this is this and that is that, or if it's just a market crash. But just in the sense that I hear a lot of things different from what we're presented with in terms of, for example, Trump, where it's kind of tricky to understand if he really is doing and saying what is being presented in the media. Again, there's a large school of thought that, you know, he's well aware of the issues and is kind of fighting a very complex chess game against the deep state. I couldn't tell you that for sure, although I am leaning towards believing that myself. But in either case, the numbers are what they are, so we'll see how it all unfolds. Yet, certainly I would steer clear of Fannie and Freddie related assets or in the housing market. So let's take a look over here. We've talked before about the Turkish currency crisis. An interesting, the Central Bank of Turkey increased its main interest rate to 24% from 17.75%. Keep in mind, the US dollar at, what are we at? 1.5% now. So think about the comparison of the two, because again, let's say all the credit profiles were the same. If it's the same risk of getting repaid back, and one's going to give you 24% on its money and the other's going to give you 1.5%, which one are you going to choose? But Chris, no, you don't understand, man. You don't understand. The United States is the world's reserve currency. It's the bastion of stability. Yes, I missed that one. Or maybe I've just given up on that illusion. It is certainly, I will agree that it's known as the reserve currency. And yeah, it's certainly wielded a lot of power, but let's take a little look at this, which is Turkey's debt to GDP. I'm going to guess this is, this is from 2010. So let's see if we get anything good on this one. That's private debt above. Come on, interweb. There we go. So the point that I'm getting at, if we can get our page to load here, which is that whatever Turkey's debt to GDP is, which apparently this site is not going to show me right now, whether it's 40% or 100%, keep in mind that in the U.S., we have national debt of 21 trillion. I think GDP is somewhere around 15 or 16. So already over 100%. Yet that doesn't even really tell the whole story, because if Congress followed the same accounting principles that, they held at criminal hearings for Enron, for the way they were doing their accounting, Congress violates those same GAAP accounting principles in their accounting for Social Security and Medicare. Now, when those are factored in, I've heard estimates routinely between 100 and 200 trillion. I mean, back in 2012 or 13, even the Congressional Budget Office said that the amount of the unfunded liabilities was 85 trillion. And if that's what the government's saying, it can usually add a zero or at least boost it up a little bit to get the real number. But 200 plus 100 or 200, whatever it is, plus trillion against a 20 trillion GDP, I mean, it makes Turkey look like their currency is a bastion of stability. So, again, it's interesting seeing how these things are playing out, because people are used to the dollar. Everyone's saying, well, we'll sell our Turkish currency and buy dollars because that's where it's safe. Yet I would argue that actually, we don't need to argue about it, but I would say that the U.S., yes, it's a gray area because there's the reserve currency status, so that distorts things. Although all these things come to an end, I believe there's not in history a currency still that has survived, a fiat currency that has survived long term. And I don't expect the dollar to be the first one either. I think the process is underway to change that in some format. When that happens, we'll see. Yet, it's interesting that you actually see other banks, the central banks, raising interest rates when they're having these issues. Yet, here in the U.S., still the opposite of that. Well, maybe not the entire opposite. A decade later, after the crisis, we've raised from 0 to 1 and change. So anyway, and to wrap up, though, we do have some good news, especially for the Silver fans, because Jamie Dimon says that he could beat Trump in an election. I had to giggle about this one a little bit. And to be fair, he didn't say that he was going to run for president or that he thought he was going to win. He did seem to want to stick it to Trump. Although there were some interesting comments in here, if I believe, there we go. Again, I am not a big Jamie Dimon fan myself, with all due respect to him. I have not met him. My personal belief, how can I phrase this to be politically and legally correct? Personally, from my experience, my belief is that that bank is involved in some things that are not above ground. Certainly, you can look at all the things they've gotten fined for, a whole series of market manipulations and otherwise. So that said, we'll just take a look at his quote. Blah, blah, blah. But here's the interesting part. And I grew up in a poorer part of Queens than he did, but I am a banker. I am part of the elite. I don't think the American public looks at Trump as part of the elite. They look at him as the upstart who punched the elite in the nose every day, which is really interesting to me. Also interesting is that he's talking about, I guess his wife wouldn't let him run because that would turn the White House into the nanny show with Fran Drescher. It's a scary image for your weekend. Yet, maybe not Fran Drescher. I'm sure she's lovely, but anyways, it's interesting that he would actually say, especially in this climate where, and I've not seen the Clinton email servers. I've been looking around and seeing if I can get access to that, but I have not seen them. So I can't confirm that what's on them is as incriminating to as many of the elite names as I continue to hear and think is likely to be true. Yet it's kind of to say, it's almost like he's bragging about being an elite, a banking elite, which I would say if he does run for president, maybe you don't want to use that as the platform, but just a fascinating comment, and thought I would throw it in here and let you decide what to make out of that one. Either case, I don't think Jamie Dimon is going to be president, although something to leave you with is the way the bankers and government, we saw Hank Paulson go out of Goldman Sachs into the Treasury. Again, I'm just sharing my opinion. I'm not attempting to denigrate someone, but I have wondered at times if essentially JP Morgan and the banks and the government are all really one and the same, at least maybe not literally, but figuratively, in the sense of who really is making decisions and controlling things. So anyway, dig into it. Leave your comments below. Again, it's a lot of these things. I like to be careful of what I say I believe is fact, what I say that is speculation, primarily because the financial markets, to me, it's less of a matter these days of crunching the numbers but rather determining what's actually accurate information or not, and then how to factor that in, which is what I like to pass along. So if you have any comments or suggestions, happy to hear those too. And hit the subscribe button. I will see you again next week. Have a beautiful weekend. Thanks as always for watching.